find yourself wondering where you should focus when looking at your organization's financial statements? You know all those numbers are important, but you're not sure how to interpret them and what questions to ask. Your role as a board member includes a fiduciary duty of care to oversee operational results and to communicate those results to stakeholders. Here are a few tips to help you succeed. The financial health of your organization starts with making a profit. Although the organization is a not-for-profit entity, it must make a profit or it will cease to exist. The term non-profit means that the organization's net profits do not belong to any one individual or group of individuals. Non-profit organizations deliver their mission through self-sustaining programs, as well as through a collection of profits. Those profits can be strategically invested into initiatives as needed. Accumulated profits or reserves also allow an organization to fund spending during peak times of the year, when revenues might follow later in the year. Or they might provide a savings account for unexpected cash flow shortages, expenses, or losses due to unforeseen events or economic conditions. Most organizations have financial and reserve policies which indicate when these reserve funds can be used, who is authorized to use them, and how this is reported to the board and other stakeholders. You can rely on your association management company for financial reporting and analysis, but your fiduciary duty includes understanding the financial health of your organization and will allow you to contribute to data-driven decisions regarding the strategic direction of the organization. The Statement of Financial Position provides a snapshot on a specific date. It has three main components: assets, liabilities, and net assets. This snapshot allows you to assess the financial health of your organization. Assets will include your bank and investment accounts, fixed assets such as building or furniture, accounts receivable, and prepaid expenses. Accounts receivable are items already recorded as revenue as they have been committed to for the current fiscal year, where the cash has yet to be received. Prepaid expenses are items paid for by the organization for which the related goods or services will be received and recognized as expenses in a future fiscal year. Liabilities will include accounts payable, debt, and deferred revenue. Accounts payable are items already recorded as an expense, where the payment has not yet been issued as of the end of the period. Deferred revenue is cash collected by the organization for goods or services which will be provided by the organization and recognized as revenue in a future fiscal year. Net assets include the organization's unrestricted, designated, and restricted net assets. Unrestricted net assets are not subject to any limitations. Designated net assets have been earmarked by the board for a specific purpose, and restricted net assets must be used for specific purposes as designated by the donor. The total net assets on the Statement of Financial Position indicates the net worth of the organization, which is a guide to assessing the organization's sustainability. Said another way, if the organization ceased to exist on that reporting date, the net assets would be equal to the amount of cash and fixed asset value left after all accounts receivables were collected, all accounts payable and debt were paid, and all revenues and expenses were recognized. The Statement of Activities reports revenue, expenses, and gains or losses on investments or other assets, which result in the change to net assets for the fiscal reporting period. Most statements will include columns for reporting the current month, fiscal year to date, current fiscal year budget, year-to-date variance between budget and actual, and prior fiscal year results. Some organizations also have supplemental statements of activities for the annual meeting or other significant programs or areas, which isolate and provide detailed revenue, expenses, and net income solely for that activity. Many times, these supplemental statements provide critical information when analyzing the sustainability of certain programs or initiatives. Some areas to focus when reviewing the organization's financial statements include looking for trends when comparing year-over-year results. Based on where the organization is in their membership cycle, or if the annual meeting has occurred, how does this fiscal year compare to the last? Another area for focus is the variance between actual results and budget. Are these revenues significantly under budget when you would expect more at this point in the year? Are their expenses significantly over budget? Ask questions as to why these variances exist and how management plans to address them if they negatively impact the bottom line. One additional area to focus is on the variety of revenue sources. Is the organization too dependent on one particular source of revenue? Or is it diversified such that a significant economic event would not impact the sustainability of the organization over time? You don't need to be a financial guru, but armed with these few tips, you can easily fulfill your fiduciary duty of care and be confident in your ability to read and interpret financial statements and review and approve budgets to protect the organization's assets.